Welcome. In this video, how much can you earn if Zbcn coin becomes 10 cents? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
First, it's important to understand what a downtrend is. If a financial instrument has been moving downward for a long period of time, with each peak forming at a lower level and each dip also occurring at a lower level, then we're looking at a downtrend. The logic behind a downtrend is that sellers dominate the market, and every attempt at an upward move is met at a lower level, pushing the price back down again. Therefore, as long as the downtrend is not broken, sellers remain in control of the market and bullish attempts are short-lived. However, once the upper line of the downtrend, the trend line, is broken, the situation completely changes. This breakout indicates that buyers are gaining strength, seller pressure is decreasing, and the price is starting to find a new direction. Especially when a long-term downtrend is broken, it becomes a psychological turning point for investors. Many people expect the trend to continue, but once the breakout occurs, a new upward movement begins. Breaking a downtrend line essentially means that the balance between supply and demand in the market has shifted. During a period of heavy selling, each price rally is stopped at a lower level. But over time, buyers start to gain strength. Investors begin to see the dip levels as attractive, new buying pressure builds, and the price pushes against the downtrend line. If this pressure is strong enough and the price breaks upward through the trend line, seller control decreases. This breakout is usually supported by volume, as large players also step in at trendline breaks to confirm the shift in direction. At this point, an upward move is likely to begin. When a downtrend is broken, not only does it have technical significance, but it also creates an important psychological shift. Investors who have been used to constant declines perceive the breakout as a wake-up call. Fear and worry slowly give way to hope. Long-term investors see the breakout as a reassuring signal. Short-term buyers also join in after the move, increasing participation and strengthening upward momentum. This chain reaction is what triggers the post-breakout rally. The size of the rally depends on the length of the downtrend, the trading volume at the time of the breakout, and the overall sentiment in the market. When a downtrend is broken, a retest move often happens in technical analysis. This means that after breaking above the trend line, the price may come back to test that line again. If the price then bounces upward, it strongly confirms that the breakout was not false and that the uptrend has truly begun. Investors should wait patiently for this moment and not make hasty decisions, because not every breakout is sustainable. Sometimes the market makes false breakouts to trap buyers before resuming its decline. But in a solid breakout, both the technical structure and trading volume confirm the move upward. The break of a downtrend also marks the beginning of a new trend. While the price was previously forming a downward channel, it now begins to establish an upward channel. Dips form at higher levels, and peaks also move higher. This is the birth of an uptrend. For investors, these breakout points can signal the start of major rallies ahead. Especially when downtrend breaks occur near market bottoms, they can turn into serious long-term profit opportunities. From a psychological perspective, when a downtrend breaks, a wave of confidence spreads through the market. Long-waiting investors start buying with the thought that the rally has begun. These new buys push the price higher. Other investors then notice the move and rush to join in, driving the price even higher. This creates a domino effect. Seller pressure breaks, buyer strength increases, and the uptrend grows stronger. Downtrend breakouts are particularly important in the cryptocurrency market. Investor psychology shifts very quickly here. People may wait on the sidelines in fear, but the moment the trend breaks, they often rush in together. This can lead to sharp rallies. Sometimes a single breakout can push prices up by dozens of percentage points in a short time. That's why it's crucial for investors to closely track downtrend lines on charts. The sustainability of the rally after a breakout also depends on market dynamics. If the overall economic conditions, news flow, and sector developments are positive, the breakout can evolve into a stronger rally. If negative news emerges, however, the breakout rally may be short-lived. For this reason, investors should pay attention not only to technical analysis, but also to the general sentiment of the market. Still, a solid downtrend breakout is often a strong signal of medium to long-term rallies. In conclusion, the break of a downtrend signals a fundamental shift in the market. This breakout is the first sign of an upward move both technically and psychologically. The price has escaped downward pressure and gained new momentum. That's why downtrend breakouts carry major opportunities for investors. When analyzed correctly, these breakouts point to the strongest beginnings of bullish trends. And from that moment on, the rallies that begin write the new story of the market. But we can't rely only on trends to make decisions. So let's take a look at other metrics as well. Stay tuned.
One of the most emphasized topics in technical analysis of price movements is understanding the structure of price in certain areas. In particular, structures called bearish order blocks usually appear within downtrends or in areas where price encounters sellers after an upward move. These areas are zones where large players, such as institutional investors or high-capital traders, have previously executed trades and left a significant mark on the market. A bearish order block typically forms in regions where price reacts sharply downward and sellers dominate. Therefore, when price encounters such a block during an upward move, the likelihood of facing renewed selling pressure is high. However, the most critical point here is whether or not this bearish order block will be broken. If price breaks through this area with strong volume, it shows that sellers have become ineffective and buyers have taken control, one of the most positive signals that the upward move may continue much more strongly. A bearish order block positioned above price is often a zone closely watched by investors. These areas are more than just graphical markers, they are psychological barriers. Since sellers were previously concentrated there, many investors hesitate when price approaches it. Some may choose to take profit while others may consider opening short positions. This causes volatility to increase around those levels. However, once these areas are broken, it usually creates a huge wave of confidence in the market. This is because price has managed to continue even in the area thought to be the strongest for sellers. In such a situation, buyers' motivation increases, previously hesitant investors want to jump in, and this multiplies the momentum of the move upward. Breaking a bearish order block can signal not only a short-term rally, but often a longer-term trend reversal. Since these blocks typically form as a continuation of an existing trend, their break indicates that the current trend is weakening and that a new bullish phase may be beginning. This is why technical analysts pay close attention when price moves through these zones. If strong candles, high volume, and increasing momentum are observed during the breakout, the likelihood of the rally continuing becomes even stronger. Another important factor to consider is how the breakout occurs. Sometimes price tests the order block several times without clearly breaking through. In this case, sellers are still strong. But if price decisively breaks above and holds, meaning the block begins to act as support, the market can be considered to have entered a healthier bullish phase. This transition shows a change in market structure. The dominance shifts from bears to bulls. Such breakouts strengthen investor confidence, attract new buyers, and make the rally more sustainable. Once a bearish order block is broken, new target levels usually open up ahead of price. Resistances that once seemed difficult to overcome become easier to break. This is because a psychological barrier in the market has been removed. Additionally, after the breakout, stop-loss orders placed below the bearish order block by investors contribute to extra buying pressure. As sellers exit the market, buyers' appetite grows, pushing price upward even faster. A chain reaction forms. Retail investors follow in the footsteps of big players, new buying enters, and price accelerates its upward momentum. In this sense, breaking through a bearish order block above price is extremely positive not only technically, but also psychologically. Investors view such areas as risky until broken, but once broken, the same area becomes a strong support. In other words, the market's perception of risk completely changes. An area once dominated by sellers turns into one defended by buyers. This transformation supports continued upward movement in price action. Another factor supporting price growth after the breakout is confirmation from technical indicators. For example, rising volume, bullish signals from momentum indicators, or positive shifts in trend indicators further strengthen investor confidence. This allows price not only to make a short-term spike, but also to lay the foundation for a long-term bull trend. At this stage, potential obstacles to further upward movement decrease, and the probability of price reaching higher levels increases significantly. In the cryptocurrency markets in particular, breakouts of bearish order blocks often lead to sharp rallies. This is because a large portion of investors in this market follow technical levels closely. Thus, when price breaks a bearish order block, it serves not only as a technical signal, but also as a buy trigger for thousands of investors. This collective reaction is one of the strongest forces pushing price higher. A breakout supported by volume creates a domino effect in the market, driving price toward new highs. In conclusion, a bearish order block above price is a critical turning point for the market's future. If this area is broken, a much stronger upward path opens up ahead of price. This breakout shows that sellers have lost effectiveness, buyers have fully taken control, and the rally can continue with greater momentum. Investor confidence rises, new capital flows into the market, and price is driven higher. For this reason, the breakout of such a structure is always interpreted as an extremely positive development.
If you had 1 million Zbcn tokens and the price rose to 10 cents, it would create a highly remarkable profit opportunity. Because when you multiply 1 million tokens by 10 cents, you end up with $100,000, which is a huge amount. This figure could be a turning point in an investor's life, especially depending on how small the initial investment was. For example, if Zbcn is currently trading at a much lower price and the investor accumulated at those levels, reaching 10 cents could mean a return dozens or even hundreds of times greater than the invested capital. This would bring the investor not only financial gain, but also psychological confidence and relief. Because in the crypto market, a $100,000 income is something many people cannot achieve even after working for years. Detailing the scenario of holding 1 million Zbcn tokens that reach 10 cents, it's not only a numerical increase in value, but also the possibility of achieving financial freedom. For many investors, $100,000 could mean getting out of debt, starting new investments, or executing different life plans. Especially when low-priced crypto assets rise to such levels, it creates a strong feeling of being rewarded for acting early and being patient. This becomes a source of motivation for future investments. By nature, people who experience such gains often become more attached to the market, increase their research efforts, and adopt a more professional perspective. The $100,000 profit from Zbcn reaching 10 cents can open new doors for the investor. For instance, it could serve as a down payment for a home, be used to start a business, enter new investment fields, or become capital for passive income opportunities. At this point, it's not just about the number itself, but the value it adds to life. For many, $100,000 is not just a figure in a bank account, but a tangible power that can shape their future. Whether it's used for education, travel, or further investments, this amount can bring significant contributions to someone's life. Another important outcome of such gains is a change in vision. Someone who may have started with just a few $1,000s can suddenly find themselves with a $100,000 portfolio and completely shift their mindset. They evolve into an investor who no longer settles for small profits, but instead sets bigger goals. The volatility inherent in cryptocurrencies makes such stories possible. A coin can suddenly experience a huge rally, and patient investors who hold on can reap the rewards. The scenario of Zbcn reaching 10 cents perfectly illustrates this. Of course, another important factor here is risk management. Every investor knows that in the crypto market, there is as much risk of loss as there is potential for profit. However, holding a large amount like 1 million Zbcn tokens and seeing them reach 10 cents presents a return far greater than the risks taken. In this case, it becomes a scenario where risk is heavily rewarded. One of the strongest motivators for people is seeing a big return after taking risks, and in this scenario, that's exactly what happens. Buying 1 million tokens cheaply and watching them rise to 10 cents provides not only financial satisfaction, but also emotional gratification. It also validates the investor's decisions. Such major profit opportunities also affect community psychology. As Zbcn's price rises and investors start sharing their gains, new investors are drawn in. This creates hype around the coin, which can push the price even higher. If 10 cents is truly reached, it wouldn't only mean individual profits, but also increased recognition of the coin and wider adoption. This would strengthen the confidence of long-term investors. In addition, earning $100,000 gives an investor a chance to diversify their portfolio. For example, part of the profit could be moved into safer assets like gold or stocks, while another portion could be allocated to new altcoin projects. This way, they would not only secure significant profits, but also minimize risks. From this perspective, reaching 10 cents doesn't just mean making a big profit from one coin, but also laying the foundation for future investments. Holding a large quantity of relatively cheap coins like Zbcn might seem small at first, but in the long run, it can create massive opportunities. Because 1 million tokens may have originally been bought for just a few $1,000s. But if the price reaches 10 cents, that small investment transforms into an enormous fortune. That's exactly why so many investors are drawn to the altcoin market, because it offers the chance to turn small amounts into life-changing wealth. If an investor with 1 million Zbcn actually sees this level, they will experience not just financial gain, but also deep personal satisfaction. This scenario also reminds investors of the importance of patience. Many people try to make small, short-term gains in the market, but the real profits usually come from long-term holds. The rise of 1 million Zbcn tokens to 10 cents is the ultimate reward for patience. The investor who held onto the tokens despite volatility stayed focused on the bigger target. In the end, their patience would be crowned with a $100,000 profit. In conclusion, for an investor holding 1 million Zbcn tokens, the price reaching 10 cents means a massive $100,000 gain. This amount could give their life a new direction, boost their confidence, open the door to new opportunities, and lay a strong foundation for future investments. This scenario is one of the best examples of how small investments can turn into great fortunes in the crypto market. Because in this space, nothing is impossible. Those who are in the right place at the right time can achieve extraordinary profits. The rise of Zbcn to 10 cents would be the realization of such a dream, and a $100,000 profit could open the door to true financial freedom.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.